would like to welcome everyone to the June meeting of the Audit Committee. We have with us representatives from KPMG and also from BCA Watson Rice today. I also want to make everyone aware that May was National Internal Audit Awareness, National Internal Audit Awareness Month. So we celebrated that. Now it's June, so the celebration is over. Why don't I begin by handing this over to Kim to talk about the basic financial statements.
Thank you, John. Good afternoon, everyone. Before we get into the details, I do want to give you a quick summary of the highlights of the results from this year's audit. KPMG is expecting to issue 2 unmodified opinions. One of those will be on DASNY's financial statements, one on the supplementary information that goes along with the financial statements, and then they will have a modified opinion on DASNY's compliance with the state comptroller's investment guidelines and DASNY's investment policies and guidelines. And I do want to note that that's a slight change from the memo that I provided in the materials. At that point, I was not aware, we were still in discussion as to whether that would be modified or unmodified. It is a modified opinion, and that is a result of DASNY's compliance with its investment policy and guidelines. We have a maximum investment in one single institution of our investments of not more than 50%. We did exceed that amount for the majority of the fiscal year. I do want to point out, though, that DASNY does not select the trustees in most instances. And when we do, it is not a subjective or a qualitative decision. Our trustees are selected on a resolution basis. Private clients select their own trustee. And for the public clients, we take a low bidder. Primarily as a result of the state's decision last year to issue more sales tax than HIT issuances, there was a disproportionate share of new issuance bond proceeds that went to a single trustee. As a result, we were in excess of that 50%. By the end of the fiscal year, we had returned back to below 50% at 49%. I also want to note that there was no additional risk to the investments by having them with that one trustee over the 50%. Those investments are held in book entry form, and they are either registered in DASNY's name or in the trustee's name for the benefit of DASNY. KPMG did not identify any deficiencies or material weaknesses in our internal controls, and given that, they won't be issuing a management letter. And unless there are any questions, I'll turn things over to KPMG. I sense there might be a question.
I just wondered, by how much did we exceed the single trustee investment?
It did vary during the year, but predominantly it was in the 60% range. It went as high as 63%. Marie?
Thank you, Kim. My name is Marie Zimmerman. I am the lead audit partner from KPMG. And with me today, on my right, is David Barnes. He is an audit partner with KPMG who specializes in our IT audits and was assisting us this year. To my left, I have Dave Klafowski and Jeff Coach. Most of you have recognized Jeff Coach for the vast number of years, as well as Dave. With us, we also work with BCA Watson Rice. We've had a long outstanding partnership with them. And they are joining us from the video conference in New York City is Benny Hadnot and Layla. Now, Benny, do you want to talk for a moment as it relates?
Oh, okay. Well, thank you, Maureen, and to the board and to the audit committee. We're pleased to join KPMG, and this is the 10th year of this arrangement, and it's overall success. I know that when we first envisioned this, we didn't think it would last 10 years, but we're very pleased that we have been able to work together and still like each other for 10 years.
Thank you, buddy.
Okay, we had one team, side-by-side collaboration in all 4 phases of the audit, which include planning, control evaluation, substantive testing, and completion. 5 Watson Rise team members of all levels and of experience contribute approximately 30% of the total engagement hours. And I was told by my manager that this time around, my staff, they gave me some overtime sheets. I see they worked a few hours this time around. So that was great that we was able to contribute, and I see we got it done on time. And again, we're just pleased to be here to provide the support that's necessary for this very important engagement. Thank you.
Thank you, Benny. And we do want to also thank management for working closely with us. We know that this is a really tight turnaround, and it's a testament to all parties to be able to provide our audit opinion in such a timely manner. As Benny alluded to, we do have an extensive team. We have multiple specialists in subject matter that are on it. This year, in addition to adding David as our IT partner, we also added a GASB 75 technical specialist as management implemented their OPEB standard. As a part of our firm internal quality controls, the audit partner would review that. Our second quality audit partner, which is Sean Warren, reviewed it. And then in addition, this year we had that third level of review. Jane Letts reviewed it as well, just in the first year of implementation, just to have that additional look. We had no findings no significant findings or material weaknesses as it related to that. We also utilized our OPEB's actuarial specialist, who also recalculated your actuarial specialist and was in agreement with those assumptions as it related to it. So as you can see, we had an extensive team this year as management worked through that implementation to review it, and it's a testament to management that we did have no significant findings. So with that, I'll turn it over to Jeff to go through our scope and deliverables.
Okay, thanks, Marie. So working off of page 7, we've outlined both the scope and the deliverables. Really kind of more high-level scope items here. Noted at the top, our objective of the audit is to express an opinion about whether the basic financial statements of DASNY have been prepared by management with oversight of yourselves, are presented fairly in all material aspects with U.S. generally accepted accounting principles, known as GAAP. We plan to perform our audit to obtain reasonable but not absolute assurance that those financial statements taken as a whole are free from a material misstatement, whether from an error or fraud. And we do that as a reasonable assurance and not absolute assurance because we don't test 100% of the transactions. While we do that over cash investment and debts, there are several other transactions at DASNY that we use an audit methodology to kind of sample those items to kind of provide that basis of a conclusion over the audit. Our work is provided to present 5 key deliverables. The first being the audit report over the basic financial statements. The second being our audit report over DASNY's supplementary information, which is presented in accordance with AUC 725. The third is the report on internal controls over financial reporting and compliance and on other matters based on audit financial statements performed in accordance with GAAS government auditing standards. It's commonly referred to out there as the Yellow Book report. That's basically related to the internal audit the internal controls of your organization. The fourth is the report that Kim talked about a second ago, which is your investment compliance report in accordance with the requirements of Section 201.3 of Title II of the official compilation of codes, regulations, rules, and regulations of the state of New York. And lastly, we do provide a letter of our required communications to the audit committee in accordance with AUC 620. So all that information has been provided to you before the meeting, and we'll kind of go over some of those items on the next page here and some of the results. So moving on to page 9, as Kim has talked about with the basic financial statements, we do intend to issue a unmodified audit opinion. That is the clean audit opinion that typically does get provided. There is a slight change to the opinion on page 2, which is what's called an emphasis of matter. That has been provided because DASNY during the current year did adopt GASB 75, which relates to the accounting and reporting for post-employment benefits other than pension or OPEB. That is emphasized from the fact that when a user compares your financial historical periods, there are some slight changes. That's just to kind of provide the reader the fact that did change. It does note that our opinion is not modified related to this matter in that emphasis of matter paragraph. Our audit approach had not changed to what we had presented to you back in November of 2018. There were no transactions that were identified that were both significant and unusual or that lacked authoritative guidance. As part of our audit approach and preparing your financial statements, management does use a level of judgment and assumptions related to accounting assessment. These estimates typically relate to your OPEB liability, as we just discussed, your net pension liability, as well as the valuation of your leases and loans receivable. As part of our audit, we did not have any uncorrected proposed audit differences. There were no material weaknesses or significant deficiencies, internal controls over financial reporting, and there were no major issues that we discussed with management as a result of condition of this engagement. The next report that we had talked about was the report on supplementary information, and again, that will be an in relation to opinion, in relation to your basic financial statements, which will be an unmodified or clean opinion as well. We had no matters of concern related to that. The third deliverable was the report on the investment compliance. That, as Kim alluded to, there is a modification to that opinion, which kind of specifies that exception that was previously identified. With regards to the Yellow Book report, we will note within there that there are no material weaknesses or significant deficiencies. And we do not have a management letter to issue at this point, as no significant matters were significant enough that we believe was a requirement to be issued with that report. Lastly, we do note, related to our independence, we were throughout the audit period and hereby continue to be independent accountants with respect to DASNY under the auditing and regulatory standards. On the next page, we start to move into some of the specialists. I'm going to turn it over to David Barnes here, who can kind of go through some of the IT aspects of the audit that we performed this year.
Sure. So as Marie said, I was brought on this year to help kind of augment some of the IT audit work that we do. I can kind of briefly go through what we do from an IT audit perspective. And so we focus on JD Edwards and SunGard as the two main in-scope systems. So we make sure everything's scoped so that the financial report, the important financial reporting systems are in our scope. What we do is we understand whatever the IT controls are that are coming out of that, and we test the specific IT that are enabled by these two applications. And then most of the work that we do is around testing logical access, so who has access to the system, who can enter the system in the front end and make changes, who has administrative level access to the systems, who can access the data that the systems are drawing upon, and then who can make changes to the system. So we spend a bit of time making sure that we understand how those individuals are provisioned access to the systems. If there are changes that are made either to data or to the programming language supporting the system, we make sure those changes have gone through some sort of user access review and they're appropriately approved and migrated into production. And then we do spend some time around things like job processing or backup and recovery and things of that issue, also just kind of round it out. But we completed those procedures. Any findings that we have, we work with management to make sure we understand the implications to the audit. At the end of the day, there was nothing significant that came out of it. We couldn't kind of understand and make sure there wasn't an impact to the financial statements. And we kind of wrapped up our work. It's been wrapped up for a while, and we report back to the audit team and concluded that.
Yeah.
Yes.
Question. Do you are you able to spot check the integrity of, say, the SunGard system itself? I mean, so for example, if somebody put something malicious in an update to the SunGard system, is that something that we would be able to discover, or are we at their mercy?
Are you thinking like a patch update? Like if SunGard pushes something out?
Yeah. What I'm really asking is it possible for us to spot check the integrity of the underlying system itself? It's obviously doing all sorts of things automatically,
Right.
And we're relying on it to do those things.
Oh
properly.
yeah. Let me give you two answers. One is whenever if you're relying on a system that could have patch updates or version updates, there is a certain level of reliance you have on the producer of the system that they're doing their own checks, and we usually rate a lot of those as fairly lower risk. And so if you have 10,000 users of a system, if something is pushed out and it bugs the system in some way, generally that gets figured out, and there may be further patch updates and things of that nature. When in your own process, though, you should have a way of looking at the patches post-implementation to make sure that whatever the controls are that are relying on those patches, that they're still in place and they're still operational. I'd have to check specifically to see what this organization does in terms of all the specific patches, but generally speaking, many organizations will have a process where they'll assess how big of a patch or an upgrade it is, and they'll do some sort of regression testing to make sure that nothing was broken along the line. But what I would generally say is patches are generally low risk. If it's a version upgrade, you would really want to spend some more time to make sure that whether it's if you have to migrate data to make sure that's correct, or just as importantly, if you're relying on specific reports or IT controls to make sure that once the upgrade is done, that those controls are still working in place.
These are big packages, software packages. Is there a large user base for something like SunGuard? Or I mean, we handle tons of money. Is this sort of relegated to organizations like DASNY and big banks, or?
I'd have to check specifically, but I think there are a lot of users of the
There are
system.
a lot of users. Yeah.
And if you say big bank, I mean, there are a lot of banks out there.
Yeah.
Even when we talk about commercial-sized banks, regional banks, they're all relying on these types of applications.
So these are not obscure packages.
I would have to double check that, but
Yeah.
I'm pretty sure you're using what a lot of other institutions are using. These are not, to the best of my knowledge, they're not customized for this organization specifically.
That was
They're
gonna be my
used very
question.
broadly.
It's not it's off the shelf, it's not customized?
SunGuard system has been customized
Right.
by the developer for DASNY's specific needs, and when they have patches and upgrades, they coordinate directly with Kim Ellis, who heads up our investments area, as well as our IT department to implement those changes and do the appropriate testing to make sure that all the data is still in integrity. We also do monthly reconciliations of the data against our trustee balances, so we do double check that in terms of the integrity of the data throughout the year, in addition to the year-end testing that KPMG does.
Yeah.
So those monthly reconciliations are outside the system. We're not using SunGuard to do the reconciliation.
We reconcile to SunGuard, but we reconcile to what we have independent of SunGuard to confirm those balances.
And to be specific also, a lot of these changes that are coming through, we do test those in terms of we're making sure that it's going through your change management process. So we're not testing, but we're making sure that management is performing the appropriate test procedures on those larger updates that are coming through.
And we did test that reconciliation control as it relates to our investment, and we found that management was operating effectively as they were doing that monthly review.
Thank you.
Also on the specialist list that's not noted here is our assistance with internal audit. We work closely with them throughout the year to perform procedures that we rely upon. We do re-perform 20% of that test work that we have direct assistance with the internal audit team, and we've always had really good reliance upon that, and we work closely with them. And then I'll turn it back over to Jeff to finish going through our other involvement of specialists.
Sure. The other items that we utilize a tax specialist out of our Albany office who does evaluate and make sure that there are no concerns related to DASNY being a tax-exempt organization as a governmental entity. We utilize our own firm actuary, so while DASNY does hire an actuary who performs evaluations specifically over your OPEB liability, we do review those assumptions to validate that the assumptions selected and utilized make sense with industry as well as DASNY operations, and that the overall methodology utilized is appropriate and consistent with expectations. With regards to valuation specialists related to DASNY's portfolio, and specifically the investments, our firm policies that we have is for types of investment that DASNY holds. We do price 100% of those investments. That kind of gets us around 99% coverage. You do have some that are at cost that don't get priced. So we do that process, and we found that pretty much everything was right in line. We also compare that not only to other metrics out there outside of SunGuard pricing, which is the IDC pricing utilized, but we then also look at what IDC from our vendor file has compared to DASNY's vendor file to make sure there's no management bias of kind of picking and choosing what the prices are, and we identify no matters of management bias related to that aspect of it. Lastly, we do also use what's called an engagement quality control review partner. They participate in our planning process as well as review significant areas of our file. They also review the financial statements to make sure that they're appropriate and have all the required information within inside of them, and no matter identified based on their review. Lastly, on this side, we do have what are our remaining audit items that are outstanding. Prior to the issuance of a report, we will obtain from management the representation letters. This is consistent with the process from the prior years. Later on during the summer, we will perform our test work over the independent individual issuances that typically get issued. There's about 30 of them this year that will be performed this year, so we're in the process of doing some of that test work now, and we'll ultimately issue that early in the summertime here. And lastly, DASNY does put out an annual report in accordance with the auditing standards. Because that report will include the financial information, we do have a responsibility to review that report to make sure that there's no material inconsistencies with the information presented. That includes the financial statements. So once that does come out, we will review that report. With that, I'll turn it over to Marie, who will go through the
everyone's favorite section, the upcoming GASB pronouncements. There's only 2 on this page. So I know in the years past, there was a full long list, about 5 or 6. So I know that this was our last year under audit, but whoever your auditors are, it'll be focused, and we've talked with management just at a high level that GASB 87 lease accounting is coming down the pipeline. It's applicable for 2021, but really need to start working on it sooner, because with the amortization as you're bringing on these new leases, that'll start as a 4/1/20 for DASNY. Really, some of you may already know, and we've talked about this GASB before, we're bringing on the leases. What GASB had said is that we believe a right to use an asset you should recognize that almost like an intangible asset, and then you would have that offsetting liability as well. So they're really kind of taking a one single model approach and bringing those leases onto your books. The other one, which I know is very pertinent to you guys, is the conduit debt obligation. GASB 91 has been issued since the last time we talked in our planning. So that statement is finalized. It is effective for years 2022. Early adoption is allowed. Although, as we've talked in the past, the conduit debt obligation that is not a liability for the issuer, such as your DASNY conduit debt that relates to your private, and as you can see in your MD&A, that's less than 30% of all of your conduit debt, would not be on your books. It would be disclosed as a footnote, though. So the level of effort for management to maintain that information and to have that data readily available is still going to be there. It just won't be grossed up on the balance sheet. But as you can see from your MD&A, it's the smaller portion of your debt that was coming off.
So we would keep on the books the PIT bonds, sales tax bonds,
All the state debt.
all of the state to the hospitals. Are they?
Secured hospitals.
Yeah. Yeah. Okay. So a lot of debt is staying in the. Okay.
Still will be on the statements. Yeah.
What's left?
All the stage, so about 70% of
Yeah,
what's on
about
the books
70%.
now will remain.
Remaining books. Okay. Thank you.
One that's not noted here that I think we had talked about was GASB 89, and it's just the accounting for interest costs incurred during a construction period. I just wanted to highlight that because right now entities have the option to capitalize that interest cost during the construction period. As DASNY assists in a lot of construction, sometimes you may have questions from your component units as you're going through that to get that data. Now you no longer will be required to recognize that capital asset of that interest cost during that construction period. It'll just be expensed as incurred as it relates to the debt. That was our presentation for today. We do have in the appendices some of the information in a little bit more detail. So the areas of our audit focus is in Appendix A. And then in Appendix B is our consideration of fraud. I know that we have in the past gone through that in a little bit of detail, but it is consistent with the AICP standards. And then we have our required responsibilities. We also will be issuing our letter stating our required responsibilities to management. Does anyone have any questions for us?
Would you say that when you reperform an audit that our internal audit department has done, it's essentially like auditing internal audit?
So if they had a sample of items, yes, we would go and do the exact same thing that they just did and validate it.
Yeah.
So that
Everybody gets audited sooner or later.
we are relying upon their work, and so as our requirement is, in essence, everyone gets audited at some point. Even auditors get audited.
And so that your work maxes out at 20% of their work. Is that, did I hear that correctly?
Yes.
You only do 20%?
We do 20%. Yeah. So
Great. Thank you.
Thank you.
Thanks very much.
Yeah. Thank you, Benny.
I have one question here.
Paul?
When I was flipping through I noted the report on investment compliance, in excess of 50%. What I understand is what's the risk and what's the significance of having gone above 50%? I gather that there was no loss or no negative impact, but what is what's the concern and that rule is getting at and is trying to avoid?
So we are just opining. We're required to do the audit, and here we look at the state's required standards, and then also DASNY's policy. DASNY has this 50% policy in place, so our requirement is just to state whether they were in accordance with their policy or not. We don't believe it has a risk as it relates to our financial statement audit. As Kim had noted right in the beginning, this was just an observation that you were outside of DASNY's policy. So Kim, if you want to add any color to the nature of your policy.
Thank you. We've had some discussions internally, and we really see no risk in having exceeded that 50%. As I had noted, because the investments are in book entry form, we don't see a risk overall to the investments themselves, and it's certainly an area that we might do well to consider whether that 50% limitation is, at this point in time, adding any value to DASNY by having that in its policy guidelines.
I was going to suggest that we actually try to get some idea of the history of the policy. We might never know. We might never be able to find out how they got to 50%.
I mean, there just used to be many, many more trustee and custody.
I'm sorry.
Much more what?
There were many more trustee banks back when this policy went in.
okay.
So there were more options.
Sure.
So that's where-
So you're right. It is time to take a look at whether or not
The market is very heavily in favor of two trustees at this point, and that is typically the vast majority of where our investments are. The two other trustees that we use have a very small percentage at this point in time.
Paul, are you happy with what you've heard?
Yep. Thank you.
Okay.
Thank you.
Thank you.
Before I turn this back over to Kim, behind tab 6 of the board packet are minutes from our April 9th audit meeting. If board members have had a chance to look at those minutes, could I have a motion to approve them? Paul, thank you. Beryl, I think it's up to you. Yes. Thank you.
Yes.
All in favor? Aye.
Aye.
Any opposed?
Aye.
Good. Okay, the minutes are approved. I'm going to turn it back over to Kim for the annual investment. Oh, do we want to recommend these financial statements now to the board? Do it later? Okay. Then I'm going to turn this over. I'm working without a script, everybody. I'm going to turn this back over to Kim to talk about the annual investment report. Thank you.
Thank you, John. Before I get to the investment report, I would like to spend a few minutes going through some of the details on the financial statements and the financial results for DASNY's operations in particular. So if we turn to the MD&A and the financials, and beginning on page 5, our executive summary, I'd just like to highlight a few of the items that we disclosed in there. So if we first look at our lines of business, as I noted earlier, we had a strong year with our debt issuances. It was a record-breaking year at $8.7 billion worth of issuance. Our construction management line of business, we completed the 256-bed residence hall for SUNY Brockport, and that was the first project in recent years using design-build. We began work with the Office of Mental Health on a new 262-bed residential building in the South Beach Psychiatric Center. We continued work with the Department of Health and the Empire State Development Corp on the new $750 million life sciences public health lab. And we continued our permitting work for the Moynihan Station and Javits Convention Center projects. As Marie noted previously, we did this year, from an accounting standpoint, have 2 new accounting pronouncements that we had to implement. The first being GASB 86, and that relates to the treatment and disclosure of certain bond defeasances. Because our defeasances met the criteria to be considered legally defeased, the new statement did not have any impact on DASNY's financials. The second statement, GASB 75, relates to our post-retirement benefits other than pensions, or OPEB. The new standard brings our accounting in line with how we account for pensions, and it also is now in line with how private industry recognizes full liability that we expect to pay for these benefits. Under the old rules, we recorded OPEB expense that was comprised of primarily 2 components: a portion of the total projected cost that related to the current fiscal year, and a portion of the remaining total projected cost that we were bringing into the expense evenly over a 30-year period. Historically, the amount that we contributed was less than the amount of the expense, causing us to record a liability at the end of each year for that difference. At the end of fiscal year 2018, that liability was $138 million. Under the new rules, we have to recognize the full liability on our books, and the most recent actuarial valuation that we had for the beginning of fiscal year 19 had the total projected cost valued at $183 million. Comparing that to what we had on the books of $138 million, we had to increase the liability by approximately $46 million, and that resulted in a corresponding reduction to our beginning net financial position. So that did not impact the current year change in net position. We did restate the beginning balance of our financial net position. Are there any questions on that before I move forward? In turning to our financial results, overall, the financial statements reflect an increase in our net financial position of $89.2 million, the majority of which, or $88.1 million, is activity in our restricted funds related to the bond issuances. The remaining $1.1 million relates to DASNY's operations. In terms of the lines of business, the increase in the net financial position of approximately $1 million was primarily due to a lower allocation of OPEB expense to our private clients, which in turn was a result of a larger share of our work during the fiscal year relating to our public clients. DASNY's underlying operations were essentially break-even. As a reminder, we do allocate the current year OPEB expense and liability that we've accumulated over the years. We allocate that between our public and private clients. Because it's a long-term liability that accumulates over many years, we use a 5-year rolling average in order to do that allocation, and that 5-year rolling average is of our direct labor costs. So wherever the direct labor goes, we look at that over 5 years and we allocate the OPEB costs accordingly. As of March 31st, 2019, that 5-year average for our public clients was just under 89.5%, and that was almost a 1% increase over the prior year 5-year rolling average. terms of our debt issuances, those are shown on pages 8 through 10. As I noted earlier, we issued $8.7 billion during fiscal year 19. Over 85% of that came from a combination of new money issuances and refinancings. And over half was related to our public clients. In terms of overall customer distribution, while we continue to see the majority of issuances coming from the public clients, we did see a reduction in their share this year. So we had 71% of the issuances for our public clients this year as opposed to 83% last year. And that was primarily due to a higher level of new money issuances by our private clients and a reduction in public client refundings. Turning to the retirements on pages 10 through 12, we had $4.2 billion in retirements for the year, over half of that coming from scheduled redemptions, and another third from bonds that were refunded by new DASNY bonds. In terms of customer type, there was an increase again this year in the percentage coming from our public clients. That went up from 66% to 71% this year. And that increase was primarily driven by a decrease in refundings by their private clients. If you recall from the prior fiscal year, we had a high level of refundings as the federal government was contemplating changes to tax-exempt bonding. On pages 13 and 14, you can see that we ended the year with nearly $55 billion in outstanding bonds, an increase of $4.5 billion from 2018. And the increases were primarily due to net new money and net refinancings. And the net new money would be new issuances during the year, net of scheduled redemptions. Despite the increase in the overall debt, we did continue to see the same allocation between our public and private clients. 70% of our outstanding debt belonging to the public clients, as we noted earlier, and 30% to private. Turning to the construction management line of business, pages 15 to 17, our total construction and loan disbursements increased $2.2 billion. Our certified disbursements are where we reimburse our clients. That drove the increase with an additional $2.4 billion in disbursements during 2019. And the DASNY managed projects decreased approximately $150 million. In terms of client distribution, the overall portion attributed to public clients remained at 86%. Turning to page 18, DASNY's statement of net position increased by $43 million during 2019. Increases of approximately $3.8 billion each in our assets and liabilities were driven by net increases in bonds outstanding and related loans and leases receivable. On page 19, you see our total investment balance. We ended the year at $4.9 billion. That was a $140 million increase, and that was primarily due to new bond issuances and higher interest income and higher mark-to-market adjustments, largely offset by the prepayment of debt service obligations by the state and construction expenditures. On tab 4, you see the supplementary information. The supplementary information includes schedules that break out the financial statements between our public and private clients and DASNY's internal operations, DASNY's budget and actual expenses for its operations, and a schedule of outstanding bonds and notes. We are required to submit the auditor's report and our basic financial statements to the Office of the State Comptroller by June 30th. During tomorrow's board meeting, there will be a resolution for the board to approve adoption of basic financial statements as of for the year ended March 31st, 2019. Are there questions on the financials before we move on to the investment report? Okay, moving to tab 8, we have our annual investment report. DASNY is also required to file this report with the Office of the State Comptroller. It includes our investment policy and guidelines, summaries of investment income and fees paid, and a copy of our financial statements will also be filed along with the investments report. There were no changes in the investment guidelines for the current fiscal year. Our investment income totaled $122 million. 21 million of which came from our construction funds, and the remaining 101 million from all other funds. During 2019, DASNY paid approximately $766,000 for trustee and custodial services. Are there questions? Then before I conclude and turn it back over to John, I want to take a moment and thank everyone that made the receipt of these results possible. You know, on the surface, the financial statements can seem straightforward and it's very easy to say, great, we got clean opinions. But the underlying financial records are extremely voluminous and very complicated. DASNY and I rely very heavily on the experience, knowledge, and dedication of our finance staff to maintain the books and records accurately over the course of the year. The end of the year to support KPMG, our independent auditors, to ensure that we continue to receive the unmodified opinions and ensure that our financial statements are filed in a timely manner with the state. In particular, I would like to thank our assistant directors. I have Karen Sider here, our accounting and financial reporting assistant director. Next to her is Kim Ellis, our assistant director for investments. To my right, Steve Winters-Bona, our assistant director for debt. Karma Sees, assistant director for debt, was unable to join us. Our assistant director for accounts payable, Heidi Lenge, and our assistant director for budget, Jeff Arnold, also were not able to join us. In particular, Jeff had the bulk of the work associated with implementing the OPEB standard. He has handled the work associated with pension and OPEB reporting for us, and over the last couple of years has been a significant contributor to implementing those new standards. Li Zhu also is here, our manager of accounting and financial reporting. Sophie Lai, across the table, is our Director of Financial Management, and Nick Zarelli, our Deputy CFO, who was unable to join us this afternoon. But it is without their dedication, their support, and the oversight of their teams, these results would not be possible. I'd like to thank them, and I would like to thank KPMG for their support and making this audit go so smoothly. John, I will hand it back over to you for resolutions to recommend to the board the approval of the investment report and the financial statements.
Thank you. Thank you. Before I do that, do any of our members in New York have time constraints?
6 o'clock.
6 o'clock. Okay.
But that's a hard stop. What about you?
I don't have a constraint.
Okay, that's fine. That's fine. We're good. Okay. Could I have a motion to approve the authority's basic financial statements for the years ended March 31, 2019?
Recommend approval.
Recommend approval to the board. All, Beryl?
I'll second it.
Beryl has seconded it. All in favor, aye. Any
Aye.
opposed? None. The financial statements are approved. Could I also have a motion to recommend to the board the annual investment report for the year ended March 31, 2019? Paul? Thank you.
Second.
Beryl? Thank you. All in favor? Aye. Any opposed? None. The investment report is also approved. Yeah. Executive session. We're doing this by consensus. Yeah. Okay. In New York, could I have a motion to go into executive session to discuss the financial history of a particular corporation? And I think we want the accountants to stay for this one.
So moved.
Paul? Beryl? So moved. Paul?
Second.
Thank you. Thank you both. We're in executive session. Actually, there's a second.
It's $100. You lose it. Yeah, what is that?
All right, welcome back, everybody.
Stylus.
Gerard, can I ask you to tell us about the public authority's accountability Asked annual report. Okay, that you can. So, during fiscal year 2018-19, our Public Finance Division completed 12 bond financings.
Is there the sound?
There's some reverberation.
Can you check your volume? You might want to turn your volume down a little bit.
Where is that? I'm going to tell you how to do this.
It's a little.
You have
Seems to
to.
sound. It's okay now, right?
Is that better?
So far.
Okay. It's good for you. We're not hearing the sound. Okay, that's fine. So what I was saying is, during fiscal year 2018-19, our Public Finance Division completed 12 bond financings for a total of approximately $8.7 billion. This represents an increase of $200 million over last year, while in comparison, the number of issues declined due to a high level of activity, as you might recall, during December 2017, which was precipitated by the by the tax law changes. The largest higher education, healthcare, and state financings included an $862.8 million for New York University, $685.2 million for the Montefiore Health System, and a $1.78 billion state personal income tax transaction. Construction expenditures on DASNY managed projects was $705 million. We ended the fiscal year with a pipeline of 1,025 projects valued at more than $6.5 billion. We successfully delivered the $22.8 million Brockport Design Build Residence Hall, Eagle Hall, and completed building renovations of Bishop Hall at Buffalo State and Macomb and Mason Halls at Plattsburgh, as well as delivering all date critical summer projects on time for occupancy at SUNY. Challenges. So there continue to be challenges in the public finance sector. We continue to be confronting competition from other issuers of tax-exempt debt, and market conditions and the spread between taxable and tax-exempt minimize the fiscal impact of tax-exempt financing. Within the construction sector of DASNY's businesses, DASNY managed construction expenditures were down 6% as compared to $857 million during fiscal year 2017 and 18. The profile of our work continues to shift to a higher number of smaller sized projects, which reflects the changes in our clients' capital plans. The challenge is to adapt to the smaller project size and implement cost efficiencies when managing the larger number of projects. We have moved to that. As it relates to accomplishments, some of the adjustments we made, we refinanced our financing guidelines. We have upgraded and continue to upgrade our information systems. We continue to deploy data management dashboards. We've successfully continued with succession planning and knowledge development programs. We have implemented electronic payments and are streamlining procurement and project delivery to create a competitive cost structure addressing DASNY's higher volume of smaller sized construction projects. This includes promoting our successful alternative delivery method capabilities, construction manager build and design build.
In addition to the accomplishments previously noted, management has undertaken and completed several initiatives in 2018-19, which includes expanding DASNY's energy performance contract offerings, through which we will also reintroduce our TELP program. So our conclusion is we've experienced broad support for our One DASNY initiative internally and externally. We will continue to pursue and foster innovation, inclusion. Oh, bounce it off the wall. Okay. We recognize there's always more to be done. But we think we've had a very successful year. Thank you for your support.
Thank you, Gerard.
That's it. Thank you.
Thank you.
Thank you.
Are there any questions? Any questions for Gerard in New York? Then could I have a motion to recommend to the board approval of the Public Authorities Accountability Act annual report?
So moved.
Thank you.
Second.
Paul, seconded. All in favor? Aye.
Aye.
Any opposed? Obviously, everyone said aye, so we are approved. Okay. We are we're going to have a second executive session. Could I have a motion to go into executive session to discuss the financial history of a particular corporation and matters leading to the appointment, employment, promotion, demotion, discipline, suspension, dismissal, or removal of a particular person or corporation?
So moved.
Beryl, thank you. Oh, thank you. We are in our second executive session. We are out of executive session. Let the record reflect that no action was taken in executive session other than to come out of executive session. And with that, could I have a motion there being no further business? Is there any further business? Could I have a motion to adjourn this meeting of the Audit Committee? Paul, thank you. Beryl,
Second.
thank you. I anticipated that you would second that. We are adjourned. Thank you.